Greetings, Dr. Jeffrey Scott, and this is my Market MRI Pro daily update for April 22nd, 2025. I title this FTD. No, not the florist, but a follow-through day. For those who are O'Neil enthusiasts, after you get an attempted rally, and 4 days after that point in time, you look for a major market to close above 1% with higher volume than the prior session. That is an O'Neil follow-through day. Now, half the time they're going to fail, but they often what's the word I'm thinking of? They occur before all major rallies. And we got one on the NASDAQ, we got one on the spiders, didn't get one on the NYSE, but all you need is one to wake up the market. So O'Neil used to say that you have to buy something on a follow-through day. Well, I bought a few things. We'll talk about that. Now the question is it going to be just a pop and a drop? We don't know that. Or is this going to be an assault on old highs? I've made many comments over the last several videos that it was kind of late to short and hard to go long without a signal. I think this was a signal to consider going long. If you didn't go long today and you don't want to go long tomorrow, you'll have plenty of time if this is the beginning of a rally. Just look at the bottom in 09, the bottom in March of 2020, even I think it was 2018, the Christmas time where we reversed on the day after Christmas. But let's take a look at the market, show you what's driving my excitement. Again, marketmripro@gmail.com or hdsidoc@gmail.com. And thanks for being here. If you're new to my channel, hit the subscribe, hit the alarm so you get notified of when I put these up. I don't do it every day. And I don't always post them, frankly, on YouTube. So you'll hear more about that in a few minutes. Let's take a look. As always, these are for educational purposes only. Anything I talk about should be considered education and not investment advice. The intent of this video is to demonstrate how I use the tools of top-down analysis, how I apply them, and how I use it to find opportunities in the market. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky, and you should consult with your financial advisor before making trades. And those that know me know that I am pretty much tools agnostic, and I have tools in multiple platforms. This comes from Metastock. No, it's not my stuff. It's Sagar Nandi, SuperiorProfit.co. He's got some really great tools, and one of my favorite is his Market Breadth tool. Now, this is a combination of the NYSE and the NASDAQ. And there's so much information here. But I want to show you 1, 2, 3, 4, 5, 6 green dots. That means we had an accumulation signal on each of these. The NASDAQ, the NYSE, the Russell, the S&P 500, the NASDAQ 100, and the Dow in the markets on, on Tuesday. Look to the left. How often do you see this? Well, we saw it on the massive attempted rally, which was day 1, 2, 3, 4, 5. We saw it again here on this session. And this is our follow-through day. Now, I don't have volume here, but you could see that stocks above the 200 are increasing. Stocks above the 50 are increasing. You could see advanced decliners turn positive, up-down volume turn positive, not much in the new lows or the new highs department. And you can see this blue line, which is the 13-week new high, new low, has rallied off of oversold areas, not quite overbought. So a big, big day in the market on Tuesday. If you like this gobbledygook and you're fans of CanSlim and technical analysis and tools for trading, come join us at the Orange County meeting, June 6th through 8th. It is our cheap meeting, meaning it's $300 until the end of April. Then it's $400 for 3 days of education with a number of different traders. Would love to have you join. For more information, contact Greg Mills at GAM7205 info@aol.com. Typically 4 to 6 speakers. I've already got commitments from John Person, from Chris White of EdgeRater. I'll be there. Dev will be there live. And I'm working on a couple others. Matt Caruso, I've got a tentative acceptance for him. So we're going to have a great session of speakers at this program, and I hope you can join us. And lastly, I have a Google group. It's called Top Down Trader. I welcome you to join my group. It's free. There's no obligation to buy anything. You don't have to own anything of mine to be there. For example, I posted a video last night, but I only did it there. I didn't have time to load it to YouTube. We'll also have a dialogue every once in a while during the day. I thought about posting something that I thought we might get at FTD today, but I decided to wait till after hours. Just go to Google Groups, sign in, search for Top Down Trader, and sign up. Don't forget, it's news and earnings matter as well. And Wednesday, we've got some Fed heads speaking. We got PMI, manufacturing, new homes, a beige book, and then Fed heads in the afternoon after the market closes. We had Tesla earnings after hours. I think the market was really up big on Tesla during the day, and I don't think it sold off on earnings. Another 3.7% higher after hours. Enphase, screw the pooch, and although First Solar had an awesome session in the market, unfortunately Enphase probably will not on Wednesday, as it was down 11.4%. What else can we say? SAP was up almost 9%, so that was pretty good as well. In the morning, you see we got AT&T, Boeing, GE Vernova, and then in the afternoon you've got IBM, ServiceNow, Chipotle, and then you got some big ones on Thursday with Intel, Alphabet, T-Mobile, etc. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Let's take a look at the charts. I'm going to use Market MRI Pro, which is a tool that I developed with Praveen that we did a soft launch about a month ago to make sure we got the bugs out, added a few more servers for speed, have a big update coming out in the next week, and we'll have our second and additional educators product to add to it, which will be a paid add-on from John Person. Probably launch it sometime around that June meeting. If we look at what worked and what didn't work, diamonds were up 2.69, Russell 2.65, Q's up 2.63, and Spiders up 2.6. I can't remember the last time everything was so close. They all closed except for the Q's in the upper part, almost the top of the range, 80% or higher. The Q's pulled back to closer to the center of the range, and volatility underperformed as you would expect and hope to see. You could see here one-day change. Let's rank it for the S&P 500 sectors. You could see they're all up. Financials knocked it out of the park. Discretionary was in second place, also up over 3%, followed by utilities. The laggards were staples, industrials, healthcare, real estate. Outside of utilities, some of the more defensive. If we look at what was working, blockchain, TAN is solar, fintech, e-commerce, and if you look at one-day changes, these are all up over 4%. Social, home construction, clean tech, China, super strong day. How strong was it? Well, in the S&P 1500, 96% of the stocks were up, all the sectors, almost all the industries. In the NASDAQ, 80% of the stocks were up, all the sectors, 96% of the industries. And the NYSE, 89% of the stocks were up, 97% of the industries, and 100% of the sectors. So it was a massively positive day, and because of the volume being higher than the prior session, we met that follow-through day requirement. If we look at new high, new lows, we finally ticked positive here on the NYSE on the left, new highs minus new lows. Over here on the NASDAQ, we're still negative, but we're getting smaller. Massive improvement here everywhere we look. The buckets show a dramatic shift to the right, meaning the gray shows where we were yesterday. So the things at the lower part of the Bollinger Bands and below it emptied out, and we're now moving towards the top, although we're still in a, at best, worst case, neutral type of a position. As this market, if it continues to go higher, I'll be watching over on this side to see when the stocks outside the Bollinger Band start to go up significantly. As of right now, we're not seeing that, so more signs of a positive market. Disappointed that I didn't see a Eureka today, but I saw one on HGSI, but we didn't see one on the market breadth tools, so it's probably was just positive, and what matters and what makes up your index, and not everybody updates them as frequently. I don't. If we look here, you could see a massive daily bar on the NYSE, also a big bar up, closing just off the highs. And notice the NASDAQ gave back some of it, where the NYSE did not. Looking at the NYSE, volume was less impressive than yesterday. The NASDAQ, certainly the 100, and I think the NASDAQ overall ended up with higher volume than it did in the prior session. You could see stocks trading above the 17, the 50, and the 200 have flipped up and are well off the bottoms on both the NYSE and the NASDAQ. If we look at new high, new lows, positive in the NYSE, not yet on the NASDAQ. AD line strongly positive on both, as is the up-down volume. And again, no Eurekas, Phoenixes, or any signals under here. If we go back and we look at the timing model, this is the weekly model, and we're just looking at this line at the below the charts. Red is a sell signal. We remain in a sell signal, and frankly, we're still in a downtrend. If we get a higher high here, come back down with a higher low, then we might need to talk about a new uptrend. But right now, we're still in a downtrend. And for those that are new to trading, some of the most ferocious, greatest rallies that I've ever participated in were bear market rallies. How do you know when you go from a bear market rally to a new bull? Well, you only can tell in hindsight, because prospectively, you'll be looking for new highs, but it's easy when you look back, because you can say, hey, this market went to new highs. I'll know when it starts to take out resistance, when I start to see higher highs and higher lows. Right now, we're still in a downtrend, and we had a pretty ferocious bear market rally day. If I look at the daily, early on, we're going to see the daily turn to a buy signal, and you could see across the bottoms it has not, and the we lost already on the spiders and the Qs, the bongo, which is one of the things necessary. We lost it on the diamonds, still have it on the Russell. So we're not necessarily sitting here saying that anything has changed from the big perspective. In fact, we looked yesterday that we are in a sell signal on the monthlies, on the spiders, the Qs, the diamonds, and the Russell. But I'll point out that the bar doesn't close until the end of the month. And with such a rally that we saw in the market on Tuesday, and we may follow up on Wednesday, I'll mention that in a second, with another follow-through rally, we could flip the monthly tomorrow with a big move. So I should add that after hours, Trump has come out, and we heard a couple of things. We heard we're having progression with some of the tariff talks, and we heard that Trump has no intention of firing Powell. So risk on, which means gold has down some, and the futures are, well, 400 plus on the Dow, almost 300 on the NASDAQ, 76 on the E-minis, and 33 on the Russell. So it certainly looks like tomorrow may have some follow-through to what we saw in the markets on Tuesday. Then again, it's 9 o'clock at night, or will be when I finish, and we still got a long time before we open. Notice this green line is a 17-day SMA. You could probably look at a 21-day EMA, and what you see, it's been like a blanket over price, a blanket over price. Guess what? We haven't broken out above it yet, so we are in a natural place for failure. So the first thing that I want to see, let's just blow up and look at the S&P, is I would like to see us take out. I'd like to see us take out that 17 days. So do we rally a little bit more and then break down? I think that's a possibility. Do we rally up to this trend line and fail? That's a possibility. How about up to the 50 and fail, and then the 200 and fail? So we've got four clear-cut areas of resistance. And, you know, we could go to new highs from here. This could be the beginning of the next big bull run, but it's a little bit complex here, and I'm not ready to throw in the towel for the bears. I think that we could still fail. Therefore, I still have some cash. I did buy some positions today, and I'll probably add to them tomorrow if the market continues to rally. But I'm not ignoring the fact that it doesn't matter which of the major indices I look at, you see that blanket over them, and you realize that they all have that same pattern to get through. VIX was down significantly in the market, down 8.42% as we're coming off the spike here. And then the dollar popped up a little bit. And I think that's maybe reversing some of the concerns that we've been seeing in the selling of the bonds. If we look at commodities, if the risk is back on, then that's not great for gold. And gold had a bearish engulfing pattern at all-time highs, which it set early in the session. Silver eased as well. Oil, is having to deal with downward projections on the economies, and that will impact on utilization. But then, it's struggling here. Natural gas has broken down again, and the 10-year and the 30-year opened up high and traded down and closed in the middle of their session. So again, if the concerns about tariffs abate, if the selling of the bonds, whether it was forced liquidation, margin calls, or the Chinese being nefarious, abates, if the news flow turns positive instead of negative, you'll probably see the dollar firm and maybe see the 10-year and 30-year drift up as a sign of strength. If we look at the ratio charts, the thing that really wowed me was financials really super strong. Nothing was weak in the markets. Communication continues to do well. Materials did well. Technology is the one that's been lagging, and it did okay, but it was really financials that led the way on a super strong tape. So we've now spent 17 minutes assessing the market. My assessment is this. I think that we could rally a little bit here. It doesn't hurt to see the futures, but I'm telling you that. I'm not just pretending that I don't. I think we have lots of areas of potential resistance. But you think about how day after day after day after day, as we broke down from our highs, negative news flow, negative news flow, negative news flow. And the risk to the downside was what happens when that news flow changes? What happens when they announce a trade deal? What happens when the Treasury, U.S. Treasury, comes out and says that we don't want to escalate, we want to de-escalate the trade war with China? It tells you that the market is going to potentially rally on news, just like it fell on news. Now, from a top-down perspective, let's rank by percent change. We can see financials, staples, and financials, discretionary, and communication led by percent change. No, that's not the S&P 500 or 1500. It's my universe of NYSE plus NASDAQ plus Amex filtered by 100,000 shares and $1. Let's take the top three sectors. Let's then rank industry groups from those sectors by the one-day change. This is always not my favorite. Packaged foods, investment bank, asset management, residential, construction, broadcasting, luxury goods, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So these stocks down here, the 185 stocks, represent the leading stocks in the top 10 industry groups from the top three sectors. Now, there's lots of things we can do now. We could rank them again by one-day percent change and just go through the list. Or this is actual move, but that will come up to the top anyways. Netflix looks incredible, doesn't it? It's unfortunately for the holders of Netflix, they didn't get the pop the first day because Netflix earnings came out on Thursday, right before Good Friday. They got their pop in the session in the markets today, and Netflix is going to threaten their prior closing high potentially as early as tomorrow. Is it buyable here? It's kind of getting extended a little bit here, although the number is only 82. Yeah, it probably goes up. Um, let's look at, just go down the list. This is a cheapy stock, another cheapy stock. Let's just drop a filter. Let's kill the cheapy stocks. Let's look at price over $5, volume over 500,000 shares, and let's see what comes up to the top. Root. Like this stock on the way up, pull back hard. I really like this. This might be one to look at tomorrow. It's pulled back to the 50, had a big up session up 13, 14%. Of course, when you see a move like that, you worry about will it pull back some. But major uptrend, pull back in an uptrend. It had a momentum and a breakout, a CPR. The EMS is good. Relative strength and OBV. That was one that I like. So we have it built in now that you'll be able to add this. I'm going to add it to my potential long list. We'll look at the next one, PHM. Now the home builders were strong. Home builders really are beaten up, and I'm not sure if I'm ready to get in. Nice looking session, and I bet we'll see that on a lot. Ethereum, Bitcoin is rallying. Does that mean we should buy Ethereum? Reddit, recent IPO and strength, hard sell-off. And I just will go down the list and see if anything looks to me like Root. Something that's had a big run, pulled back, still in an uptrend, and looks like it's going higher. Spotify, super expensive stock, major uptrend, sideways consolidation here, a breakout here. Again, breakout momentum, relative strength, OBV look good. That might be another one that I might want to add to my long list. MTH is a home builder, looks a lot like Pulte. Netflix, again, this is one of the strongest stocks in the market. Is it one that you want to be chasing here? Everybody has their own style. It probably goes higher. WR Berkeley, nice breakout on volume, momentum, good relative strength in OBV. Is it an uptrend? Absolutely. A pullback? This one looks good. So you could continue going down the list. IMAX. Here's another home builder. Another home builder. This wasn't a home builder. This is Donald Trump Media. I'm not touching that. TPH, home builder. Genius Sports. Nice uptrend. Pullback breaking out here. Might be one to look at as well. So if you're a top-down trader, assess what the market's doing, then look at the leading sectors, leading industry groups in them. Something else I could have done is I could have just gone in here and took overall and looked at the top 10 okay, industry groups of all of them in the market, and you could see that some of them were there, but industrial specialties, pharma, solar, oil, gas may have gotten added as well. So that's from a top-down perspective. Now, we're human beings, and I think bottoms up is a lot sexier. I'm leaving the $5 and the 500,000 shares filter on. You can see we have 1,840 stocks in my universe there, about 3,400 if I take those filters off. Now, another way I like to look at the market is I might just look at two-day momentum, positive, and start from the top, see if anything new comes up. We got Netflix, then we got Equifax. Again, I'm looking for patterns that look viable. I like Spotify's pattern, and I like the one I like the what was it called? Root so far. MicroStrategy, I liked this over the weekend. In fact, I said I'd buy it if it broke out here, and I bought some today. That's one. First Solar had trying to break out, but it's breaking out from the bottom. Lilly, looked at it over the weekend. This one had some great news on an oral diabetic. The only issue that worries me about Lilly, I know some people bought it when I talked about it, over a year ago, maybe longer. The issue with Lilly is simple. the U.S. government is not going to keep paying what it pays for drugs. And long before they actually implement changes, the drug stocks are going to suffer. So you got to be careful. Beijing is a Chinese oncology company, broke out above the 50, potentially breaking out of this volume breakout momentum. Roaches like OBV look good. Just going down the list, I need to call actually on the buy gene. Come on, give me the right chart. Here it is. I have to call my friend that works for them. He told me to call them if I had thoughts about the stock. Regeneron, nope. Coinbase, nope. Apple, no big move, but boy, is it in a downtrend. I like buying things in uptrends. So one way is to just scan that way. And lastly, before I say goodbye, another thing is to just look for your scans. 2-day up momentum is my favorite scan. I got 3. Let's just look at those before we say goodbye, and then I'll tell you the ones I bought besides MicroStrategy. ENGS, I think we've seen this a couple of times. We certainly saw it yesterday. It's an IPO, so I'm going to skip it. Not that you can't buy IPOs. Triple B is in the food group. Yesterday we talked about Kroger's and Albertsons. EPSM, not that exciting looking, and NetD. Oh, it's a SPAC, so I don't care. So none of these really make it for me. So I've given you a couple. Which did I buy in the market? I added to Palantir. I think Palantir is getting ready to run again, and I bought it at free parking. I didn't buy it down here. I would have made more money. Oh, free parking is what we call the 50-day moving average. I bought PAGS. I remember one time my friend David Gallardi said, buy PAGS, buy PAGS. Well, it broke out above the 200. I bought it during the day when it broke out. I already showed you the MicroStrategy, and then the other thing that I nibbled on, and these were starter positions. They're not great big positions, and I'll close them very quick if the market goes against me. Toast was the other one, and you can see it sitting here. I didn't do much. I just liked it where it was sitting on the 200 and basing. So those are all stocks that I entered. And there's one other I was going to look at. Well, I think we've looked at enough. So thoughts for Wednesday, be careful. Gaps and craps can hurt you, so don't be chasing everything. Why don't you let the market open up and see what it does? You can buy before the market opens. I think it's tough to do. I didn't go all in today. I started a few positions. Um, and I think it's something if we are strong tomorrow, I'll probably add a few more. Have a great day in the markets. Thank you.